there's a difference between quitting because you hit your goal and taking a break. Taking a break is great. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, when can trading goals actually hold you back?
That's a good point. One thing that I find interesting is how traders will have goals like, okay, so my friend and mentor who got me into trading, he worked at a hedge fund, and it was like an investment fund, I guess, technically not a hedge fund, which turned out to be a problem for them later. But anyway, it was an investment fund. And what they did is they took all the investors' money and they gave it to this group in London that were traders, and they would trade their money, and the goal was to get 0.75% gain every week. And that was it, right? They would try and shoot for that. Now, if I'm a trader and I have a goal of 0.75 return per week, what do I do if I make 1% this week on Monday? What do? Do I stop trading? Right? And I believe the correct answer is no, because if you start cutting off, it's just like using a profit target. Profit target's great if it hits the target and then goes the opposite direction. But if it hits your target and keeps going, you're going to kill yourself because you're like, oh my gosh, I could have had so much more if I just held on, right? And that's where trailing exits are better, because they're better in some respects, because if the market really, really goes, the trailing exit will take a big chunk of that profit. But targets obviously don't. It cuts you off. And that's the same thing when you have a goal every week, every month, every day, whatever, every quarter, every year. If you hit that goal and then you stop, you're basically limiting that. And when you have those down weeks or those down days, when you don't hit your target and you're down -2% or -1.5%, that's going to bring your overall average down. So maybe you don't actually hit your goal of 0.75%. So you need to have those +2.5%, 2.5%, +3% weeks to cancel out the negative ones, right? So I think sometimes what traders do is they'll go up, that's it, I'm done, I hit my goal, and they'll stop. And the issue with that obviously is that the losing times pull them down. So I wouldn't do that. I like the idea of, now there's a difference between quitting because you hit your goal and taking a break. Taking a break is great. That's fine. Everyone needs a break. That should be built into your rules and your annual schedule. But when it comes to the goals and I've got there, I've achieved my goal, that's a bit different, because basically what it does is it limits the amount of money you make when you're really, really good, when you're really, really in tune with what's going on, basically. So that's my thought. What are you thinking?
Yeah, I think there's a lot of maybe like preconceived notions I've seen about trading and what successful trading should be. Like, oh, I should be trading on the 4-hour chart, or I should be trading reversals, or I should be a trend trader. And I think a lot of traders get stuck into that mentality that, oh, I have to be this one thing, and then they don't look outside of that, and that strategy that they think they should be trading maybe doesn't fit them, and they say, oh, I should make this percent from this because I saw this YouTube video or whatever. So I think that's where a lot of traders can get locked in, is like, if locking into this idea that this type of trading is the best type of trading and not exploring outside of that. I think that's one way that your goals can hold you back.
Yeah, definitely.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.